Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 26th of June. I'm Daniel Lam, your host for the podcast. One of the key arguments that U.S. equities bear like to use, besides what we discussed in a podcast this Monday, is that there will eventually be value seekers going for the other regions because the valuation were cheaper. Now, this sounds very reasonable on paper, except that in this FOMO world, it has only been happening at times. If you plot the price-to-book valuation of the key equity markets and compare those to their return on equity, you can clearly see that the US is the standout market on the top right-hand quadrant, i.e., its valuation is justified by its high ROE, with India not so far behind. These two are the darling equity markets of investors, showing that they are very willing to pay up for growth. Moreover, US economic data continues to outperform the rest of the world compared to expectations. Preliminary PMI estimates suggest that US economic leadership remained intact in June, despite previous signs that it was passing the global growth baton to the rest of the world. US manufacturing, services, and composite PMIs all surpassed expectations as the pace of expansion quickened, with the US service sector growing at its fastest rate in over 2 years. Meanwhile, UK, Japan, and Australia composite PMIs all pointed to slower paces of expansions, and the Eurozone composite PMI contracted at a faster pace than anticipated. Also, Japan Services PMI started contracting in June. Now, the US is relatively insulated from global growth developments and is therefore less exposed to lackluster Chinese demand versus its DM peers. The US economy is moving along in level terms with potential economic pullback in a controlled manner. Thus, we continue to be overweight US equities and the communication services and technology sectors. The tried and tested growth stocks in the US benefiting from the AI wave, as well as the broadening out from this theme, is giving US stocks a relatively defensive tilt against any broad macro swings in the global economy. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.